Hello, everyone, and welcome to the next video in the trading course. So now we will be getting into everything I've talked about in the previous videos on our structure and everything, and our liquidity, all that. So we'll be covering imbalances, order blocks, a valid point of interest, supply demand, which goes hand in hand with valid point of interest and order blocks, and our ideology of Wyckoff, which is just the market and how it moves and its cycles and everything and how price is really delivered. So Wyckoff will really get more into when we have the stages of consolidation, better known as accumulation. So we'll be able to identify if it's a reversal, it's going to come up and come down, or if price is reaccumulating to just redistribute and go higher. So it's all based off structure and liquidity, honestly. So as I mentioned before, imbalances are large displacements in price where you have that large move and you have no other candles on the opposite sides. You have that one opposite candle here and there's like no structure. You just have a big, strong move. Now, order blocks are the last up candles that create the move. So a lot of people use these as strong supply and demand zones, which you can, because sometimes you'll have multiple candles there. But order block is the last up candle or down candle before the opposite move that creates a strong footprint, breaks structure, or takes liquidity. Now, this goes in hand with choosing our valid point of interest because we look for price to return to these zones to fill imbalance, take any liquidity that's there, mitigate order blocks, and then continue down or continue up based off supply and demand, right? And again, remember that none of this works without liquidity. So again, we have our internal range of liquidity and we have our external range of liquidity. The price plays off imbalances and order blocks in order to target those areas of liquidity, whether they be on the internal range or external range. So again, going into the charts with the last video that I did, we'll take a look at the gold and how we can take a look at imbalances, supply demand, and valid point of interest and filling imbalances in our order blocks. So again, just right off the bat, we'll actually go ahead and clear up this chart. So again, we start on our higher time frame. So right off on the daily, we can distinguish So again, coming off the daily, we can already see right off the bat, we have a valid break, pullback, break down the structure. So the last up candle before the down move, remember there's no liquidity here. So we're actually going to take the breaker, which you can see we came into beautifully because we never touched the order block, right? Full on break of structure. And then we targeted that liquidity pool. And now we have the external point. We have liquidity to target beautifully up here. Right? That nice leg. Failure to break lower. And then all these internal breaks. And then once it hit this, it failed to break down because no liquidity was stuck in here. Beautiful. Beautiful. Swipe on internal liquidity. And then still not higher. Now we're coming down to the sell where we could look at this order block as our first target. Again, order block, last down candle before the up move, and look where it's targeting, the imbalance. Now you might ask yourself, why didn't it play off the breaker? Because it's playing off a higher time frame order block to where this needs to distill lower and take liquidity because this has taken that internal range liquidity. That's down move has taken no internal range liquidity. So this is a strong high and a strong low, and these are weak highs and weak lows. So now we're looking at potentially what structure wants to do next and where our next round of liquidity will be, which more than likely will be down here because we took no internal on the sell side. So again, we have a clean imbalance, a clean order block, a clean breaker. And the breaker again is just coming in the top of the range because there's no liquidity to be taken. as you can see, because there's no structure here, it's just a clean imbalance. So this would be choosing a valid point of interest, or POI, as we call it, because of it has initiation that was created right after it. So now that we have our higher time frame narrative built in, this is where we have identified our imbalance, our order block, our valid point of interest with supply and demand. Now in the small time frame, we'll see how price started to redistribute in a Wyckoff theory and how it played off liquidity. So again, we just drop down to our lower time frame. We can see how this wasn't a pullback to play off this, because this is all internal liquidity that's going to be targeted. And again, we can see how structure played off on the pullback with clearing internal range liquidity with these weak highs and weak lows, and also how it played off that valid last footprint. We'll get more into depth on inducements, traps, and cycles, but for this video, we just want to cover valid point of interest, valid order blocks, clean imbalances, which we have all in here, which again was never mitigated, just the whole ideology of redistribution. So once we hit our daily order block, our valid point of interest, and our clean imbalance fill, so where we filled in all of that, and we ran on the smaller time frame our internal liquidity points. Now, why again is this not valid? So here's your breaker right off the bat: up, down, liquidity cleared. When price came up, did it break this low right here? No. So this was that trap. So I'm looking for price to come clean in and clear that, because that's internal liquidity. On a smaller time frame with our higher time frame narrative, we have clean imbalance fills, right? And then we have our valid order and breaker block with our supply demand zone. As you can see, this is why the first attempts didn't, until we finally pierced up into it. So on the 4 hour, tying everything in together, we have our run on liquidity, right? We start to build in momentum was super strong. Momentum starts to slow. We hit our order block, and now we're just waiting for price to be confirmed. And then again, what do we have on the sell side? We have unmitigated imbalances. Unmitigated imbalance, that last unmitigated order block that took out liquidity and formed the move up. So now we're going to come down to fill all these weak lows in, mitigate this valid order block, come into our valid point of interest. This is valid again because it took a form of internal range liquidity, broke up and cleared a form of external range liquidity, and hit that daily order block that needed to be mitigated, but while taking this external point of liquidity. So again, we have both of our valid areas of interest and our valid order blocks, clean imbalance fills, which again are our supply demand areas. And now the whole ideology of Wyckoff and how price redistributes is the same thing with targeting liquidity pools and how structure forms. So again, and we'll get more in depth in the later videos, but we have our inducement buildup right here. We failed to break a high. We failed to break a low. So these are our 2 points of internal range liquidity. We have our external points of liquidity, right? We have our clean imbalance, but this is not a valid order block because there's no structure that was formed there, but this is going to be our first target. So we have clean imbalance there. So now we're waiting. So here's our trap, here's our inducement, right? No structures formed here, no clean order blocks, no valid areas of interest. You wouldn't take any trades off these highs or lows. Again, pushed up, we failed to take external range liquidity and form a new high. So we have that here. And then look at what price starts to do. Momentum starts to slow down a lot. We have that final push up. So this is all internal range liquidity that's been built up in order to get ran. Price comes up. We hit our valid point of interest of supply demand and order block. We come down. Again, this whole accumulated area is known as our Wyckoff ideology of consolidation or price reaccumulating to go higher or lower based off structure and liquidity, right? Wyckoff ideology, valid POI, because this is a daily order block, also known as our valid supply demand level. Okay. So we have that here. Again, we want to be aware of the times. So this is our New York Open. Also, we have our valid run on external range liquidity coming into our higher time frame point of interest. We have our initiation because this move down clears all this internal liquidity. Now people are thinking to buy here, right? Incorrect. We already stated didn't break a high. So what is this? This is an invalid order block. This is not a valid point of interest. It took zero liquidity and it broke zero structure. So what are we looking for next? To target that external point of liquidity now that we've cleared internal. So we've cleared internal, we failed to break higher, which validates this breaker block slash order block. Again, there's no liquidity to be taken. So we're going to identify the whole range of the area, last up candles before the down move, and then the breaker. So we have that whole area. This is our valid point of interest. Why is it valid? Why is it a valid order block and supply demand level and a valid point of interest? Because it took liquidity, created a move down, cleared internal liquidity, and broke forms of structure because that was the last low that created a high. And this is a false, this is not a valid point of interest. So this is just inducing traders to get into the wrong side of the market. So again, what happens once we hit our level and also we fill in our clean imbalance, we wait for a reaction. So we go to our smaller time frame. This is also a New York Open, right? So we wait. This was our London Open, our London kill zone that confirmed everything. So right here we have London Open. London creates the full-on break of structure. We also have all this liquidity buildup, all this inducement because no structure here was formed. So this is all invalid. Price would give a false reaction off of here in order to pull internal liquidity to go lower because it would clear out these lows and hit off this order block where you have the little bit of imbalance. But again, no structure was broken here, as we can see. So this would be inducement to pull internal liquidity, which would be above the last high, which would be here, to go lower, which it took and respected the down push here that actually broke structure because this didn't. So again, this order block should not be ran out, which as we can see, it did not. So this is our valid point of interest, our valid order block area of supply demand, and there's no imbalances to be filled here. We filled it here, so now all we have is our internal liquidity ranges to move to an external liquidity range. So again, London Open, full on break, coming into New York. What do we respect? The last up candle before the down move. Now, why is this not a breaker? Again, what do we have here? That internal liquidity that needed to be ran. So we run that, we come into New York Open. Again, super clean entries here. Stops above the London high. Price fails to break down, but eventually distributes lower. So that's why, because it failed to break here, it doesn't mean buys are valid because they're not. You had no structural breaks to the upside. All it means is that we have to pull liquidity. So again, that's that last high will come above. We won't come above this one because this is the high that broke down. So we'll come above there, which we perfectly pierced. And then this was the inducement. It came down, gave a false reaction to induce traders. Again, no break. So we had that swipe up that cleared it, the breakdown, pull back. Somewhere in this wick, there's a hidden order block, but we'll take the entire wick as the point of interest. Right? Price comes in. Again, we're still in New York session. And then you have the full on breakdown that creates imbalance. But what did we talk about imbalance? The breaker, because there's no liquidity to be cleared here. So we have our valid point of interest, our valid order block, and within this whole consolidation range, we have another ideology buildup. The whole point of redistribution, reaccumulation to go lower. So we have that detailed here, right? So we come in, again, continuing through the day. Price push up, forms a new low. So this is my new valid point of interest because it actually formed a low, ran liquidity, broke structure. and this played off of my breaker block. But now I'm looking at what? This valid order block. Now, why am I looking at this as a valid point of interest of order block and supply demand going lower? Because there's no form of imbalance there. Instead, we have internal liquidity. Again, which should be all these points. Again, price came up, formed that new low. So our valid block is actually right there. Again, what does price do? Because once it comes up, this didn't break a low. So I'm looking for the wick to be taken out, which gets taken out. Boom, we clear all this internal liquidity. So we clear it here. And then what do we have here? We have clean imbalance. So where am I looking to get a reentry at? My breaker block. Because as you can see, price never hit that order block. It missed it by and spread when it had triggered it. So we have all these entries simply based off all of our checklists, which is our valid point of interest, which will be our supply demand levels, which are also identified as order blocks and breaker blocks. We need to identify our internal and external ranges of liquidity. And then, is there imbalance that needs to be filled, or is there points of imbalance or points of liquidity build up to run, right? So this will be our checklist, and how tying again everything into our previous videos of liquidity and structure shift, initiation, price delivery, aggression, momentum, slow down, momentum shift, everything we're starting to tie together. So now what do we see? Clean entries all across the board. And this is how we get tight stops and tight R's. So we have our first entry there, second entry there, our third entry, our fourth entry, and even our fifth entry. And then even if you want it to keep stacking, because you're getting all this confirmation, breakdown, again, imbalance, what are we going to target? Our breaker block. We're not going to target our order block. Valid point of interest right there. So again, here is our last entry, and then you can just keep stacking entries where you see them valid. Break, again, internal liquidity, so you're going to take that order block, and this would be our last entry, and these are all within our sessions, as you can see. So going back to our higher time frame narrative, what do we eventually get? 1, 2, 3, 4, 5, 6, 7 entries all within our sessions, because we've identified our valid point of interest consisting of our order block, breaker, and supply demand level. We have our ideology of reaccumulation and redistribution to go higher. So this would be our accumulation, manipulation, and distribution, as opposed to down here, right, where we had this range and it went higher. Is because we've identified our valid runs on liquidity, our valid point of interest, and where price has to distill based off our internal ranges of liquidity and external ranges of liquidity. So never forget that liquidity rules the market. Liquidity runs everything. And then we have our checklist all here. And it's what happens to where you can take big trades with little risk and big reward. And now we're starting to run all our internal ranges of liquidity, because none of these order blocks are valid. Why? Because they didn't form any type of structure and they didn't form any type of liquidity. So these are all weak lows, weak highs that form internal liquidity to come to that valid point of interest where we're actually getting a little bit of a reaction now. So I hope this video helped, and we'll see you in the next one.